23, 21, possible moves to the downside. Energy is weak at the moment. I've talked about this in recent days, particularly with the emphasis and focus on Russia. But add on top of that the concerns around OPEC increasing its production in September. That brings us names like VET, Vermilion Energy, which has been chopping around that 50 and that 20-day moving average. Not a ton of downside, but the opportunity is selling spreads looking for opportunity to the downside. On the cyclical side, MGM, again, weakness as well. We've seen this happen in recent days. Names like Caesars, a lot of the casinos have been under pressure, looking for a potential move back up to that 200-day moving average. And if all of these technicals remain negative, another move lower as well. And the name that I've been shorting into the ground, Moderna, once again, breaking under that 50 and that 20. This is where we're going to be paying very close attention for a possible rebound down here at around the 24 or 25 level. Look for technical oversold at this point. The composite numbers are very, very weak. RSI, MFI, look for some movement in this histogram on the MACD. If we get down into this level, that can signal the point where the shorts start to step in and start covering their existing positions after a very sizable move down from $35 not too long ago. On top of that, our watch list, relatively simple: GIII, PLAB, and WIMI. GIII, which is apparel group, little bit of a chop, but these nice moves above that 20 and that 50-day moving average. There are no headlines yet. We are looking for retail tone shifts or just fashion catalysts. I can't believe I used that word, but fashion catalysts. Here's the thing. If you're trying to trade this and the CPI does come in light tomorrow, well, that will be bullish for consumer cyclicals, the expectation for rate cuts in September, and that gives us a nice possible move back up to that 200-day moving average. But it also gives us a nice place to just stop and cool down and know that this will be our exit point around that $24 level if we're looking for upside. Other name that continues to pop up as well is Photronics. Photronics has been choppy for a while, going back bulk of this year, but this is another semiconductor name, very quiet. It's poised for a rebound if the semiconductor optimism persists. This is a nice backdoor trade, particularly for U.S.-based semiconductor names, if we start to get some more positive news in the global semiconductor space. And WIMI, which Chinese name that we've talked about, continues to chop around. This is one of those names that for any reason it will just absolutely pop and run. We're currently sitting right at that 20 and 50-day moving average. You don't have to do anything with options. All you're looking for is a squeeze or a pop, and use that stop back at that 20 and that 50. All right. People asking what the next choice is for that 200, that new Palantir. We have some ideas. We'll continue to dig a lot deeper into this. My expectation that it will be probably somewhere in the financial or pharmaceutical space, and we're going to continue to see a lot of movement in AI as it starts to impact a lot of US-based companies for cost-saving metrics. Once again, the middle management team, the people who are part of improving morale in institutions, they're going to be gone once people realize that you don't need 12 middle managers writing PowerPoint presentations. You just need one guy who's really, really, really good at ChatGPT and analyzing business all at once. It's coming. It's going to be very, very intense for the next 36 months. Couple last names I want you to keep a very close eye on today, just taking from our breakout tickers. We do this every day. We're going to continue to assess this as we move. But looking at TradingView right now, what are the names that are in breakout and breakdown mode? Breakout mode, interestingly enough, Tesla leads the list. So Tesla continuing to move higher, that push above 229, a continuation of this. If we push above 338 on Tesla, there is a structural pullback breakout with the next technical upside near roughly 368. The investor optimism is building. Once again, I have laid this story out multiple times, particularly in our masterclass session, that Tesla is a institution that is completely and totally dedicated to the dream and then the fundamentals. The fundamentals right now don't support the story. However, investor optimism, speculator optimism is building around that robo-taxi rollout in Austin and its new Model Y wait times. It is driven by people who are also trying to rush and hit that expiring $7,500 tax credit. It is mixed on the institutional side. Some funds have been trimming their shares. Others have been looking, including pension boards, are increasing their positions because of broader liquidity conditions and expectations for the market moving forward. This is a technical-based stock. The fundamentals are completely and totally broken. But once again, we've hit this 20-day, 200-day moving average multiple times in the last couple of months, and Tesla has rebounded from the 200-day moving average. Keep a very close eye on that 20 and that 50-day moving average, and keep an eye on the CPI number tomorrow. This stock does seem on the brink of a breakout technically and sentiment-wise, and a sustained close again above 338. 338 could unleash new momentum. So keep tabs on volume, particularly the MFI, and the tax credit catalysts. We'll be watching this over the next 2 to 3 days. It is setting up very nicely for continued technical moves. The last thing on the downside is on Capital One and Apollo Group. And I just want to point this out real quick. Capital One, COF, is holding it around 208. It is skewing bullish over longer frames, but it's really mixed in the short term. A drop under that 50-day moving average would be bearish. We continue to see weakness on the RSI and the MFI, and the histogram has just been stretched for the better part of a couple of weeks. If the CPI number comes in hotter than expected, COF to the downside presents a unique opportunity for shorting. Good morning, Alex. Good morning, BB. Investor respect, both of them, Alex, both on Tesla. ChatGPT cannot produce anything. You would be shocked what you can do with ChatGPT if you know how to prompt. RXRX is a company that is in these linked to NVIDIA. We'll dig deeper into it soon. It's 9:16, and that means we have one last thing. And one last thing that I want to try to spend a little bit of time on moving forward, simply because I think it's important. There's a big question within the broader market, and a lot of people will ask, how is it that the Magnificent Seven stocks can keep running the direction that they are, while the Russell 2000 and staples are as weak as they are? So if we look at the SPY over the last 5 years, we continue to see this strength and momentum, and it has come off the back of the tax bill that happened in 2017. We've seen buying the dip. We've seen these liquidity events. We've seen the markets continue to rally and push higher. And the question is, how does that happen when the Russell 2000, which really truly represents the broader U.S. economy, has just been chopping around and trading the way it has for the last few years? So everyone says tomorrow, as we're looking at CPI, everyone says that interest rates kill stocks. And for most of the market over the last 2 years, that has been true. You could see it in the Russell. But it has not been for the Mag 7, and there's a reason for this. These mega cap names have absolutely pulled the S&P 500 higher, while the rest of the market has been stuck in the mud. We have to go back to March 2022, and this is very important because in March 2022, that was where the benchmark for the Fed funds interest rate was at 0, right back here. Today, it's 5.25 to 550, right? Where are we right now? CME. Forgive me. We are at 425 to 450. Little brain aneurysm there. All right. So what happens here? We have the fastest rate hike cycle in decades, going back to the 1980s, and higher rates are supposed to mean higher borrowing costs. That impacts present future value for future cash flows, and in theory, it should lower stock prices. We did see that happen. We saw it happen with REITs. We saw it happen with regional banks. We saw it happen with debt-heavy industrials, and we saw it happen with consumer companies. But the Mag 7, Apple, Microsoft, NVIDIA, Google, Amazon, Meta, and Tesla have all been on a different planet. And there's a reason for this. Since that first Fed hike in 2022, they are up at a massive level, going back. This is just 2023. You see the MAG ETF going from 25 in early 2023 all the way up to 60. Okay, the S&P 500 equal weight hasn't really done that much. Now, in 2023, the 7 stocks basically have just been the bulk of the S&P 500, the weight. And if you strip them out, the market most investors own would have been flat, possibly negative in some sectors for the last 2 years. So why didn't rate hikes touch these companies? It's pretty simple. They have hundreds of billions of dollars in cash. They don't need to borrow. So higher debt costs don't matter. And the second part of this is the narrative. AI, cloud, digital advertising, still growing well above the GDP and inflation expectations. NVIDIA's earnings estimates are massive just in the last 18 months. And the gravitational force that we've discussed will not go away. You can't discount it. Rates don't slow that flow of capital. And if anything, in volatile times, they actually accelerate these types of moves as investors crowd into what is called safe growth. And meanwhile, rates have been a wrecking ball across utilities, across the XLP, across all of the companies that, look at a company like Conagra that is continuing to struggle and suffer since that peak point that we saw back in 2022, 2023. Small caps are hit by tighter credit and higher rollover debt. Cyclicals are under pressure due to demand softness. And for these groups, higher rates are a double hit because cost of capital goes up and growth goes down. So over the last 2 years, interest rates have been a universal market killer. No, not that. They haven't been that. They've been a sorting mechanism for capital. Mega cap tech has come through largely unscathed. Meanwhile, in fact, they're even stronger in some cases. They pulled entire indices higher, ETFs higher. But if you look under the hood, it's a very different market for that bottom 493 stocks on the S&P 500 and the Russell. If rates fall, the rest of the market may finally be able to breathe. But if they stay high, expect the MAG 7 to continue to maintain the momentum, the leverage, and the capital flows for the foreseeable future. Guys, it is 9:21. I hope you have a great day. I hope that explanation provided you a little bit of breathing room and understanding of what's actually going on in this environment. Tim pointing out another thing, they're making 5.5% on their cash. Yep. Put the money in the money market. And in fact, don't just do that. Don't pay your vendors for 45 days as well. My take on Apollo is bullish over the long term, but for the short term remains a little bit under pressure. How many BTC are they mining a quarter? Don't know the answer to that. But anyway, Sir James, Arshovsky, Tim, Alex, Les, thanks so much for joining us today. I am going to be back for members. I will be back at 3 o'clock. We're going to start moving me to 3 o'clock to start focusing on the final hour. Higher institutions. I hope everybody has a great day. Don is coming up in about 8 minutes. He's going to throw some music on. He will take our members into the open. I hope you all have a great day. See you tomorrow. Otherwise, 8:45 for Market Masters. Take care.